Hello, my friends. It is Brooke Chanfiki here with LegaSHE, bringing you live to Brooklyn today with my dear friend, Jamie Anthony. And before we get started, I want to just touch on what CRE Conversations for All is all about. CRE Conversations for All is something that LegaSHE dreamed up a little while ago to be able to educate folks who are sophisticated, are in their careers, know exactly what they do in their own space, like you, but don't yet necessarily know a lot about commercial real estate, about the four main pillars in commercial real estate, to be precise. So owners and what owners do, matchmakers and what they do, capital providers and what they do, and service providers and what they do. So today, Jamie is going to bring us through a conversation on real estate development and investing. So we're talking about the ownership pillar. Jamie and I, we've known each other for how long now?
Probably like 8 years.
We've known each other
a long time.
A very long time. We also both really like comedy, so brace yourselves, everybody. This is going to get fun. So Jamie and I are going to have a conversation about Jamie's background, what brought him into commercial real estate development, ownership, and investing, his mindset, and just his genuineness, which is one of the reasons I asked you to join me today, because Jamie's a real dude. He sent me this lovely primer on who he is. So first I'm going to give you the real estate stats, and then I'm going to tell you a little bit about Jamie, everyone, before we get to chatting. So the real estate stats, for those of you who are watching that are real estate lovers, Jamie's company that he co-founded, Lonicera Partners, is about 14 years old and currently manages about $1.3 billion of, just a $1.3 billion. So this is the real deal, and built up over 14 years in a very thoughtful way. But the reason that I asked Jamie to join was not because of his portfolio or his specific experience. The reason I asked him to join is because he's really transparent and he gives back to folks. You are always looking for folks to mentor. I know that you travel. I know that you love to read. I know that you love artists. You're really a genuine human being. And we're so grateful here at LegaSHE to have Jamie join us to talk a little bit more about himself and about why he, being such a great, genuine human, also likes commercial real estate, and how he came from not being in this space at all, being born in Georgia, ladies and gentlemen, born in Georgia, New York City, and now $1.3 billion of real estate. So we want to get inside of his mind a little bit. We want to really be open, and we want to speak as plainly as we can to help bring as many people along as want to come along on the journey through what it is to be a real estate developer.
Great.
So with that, Jamie, do you mind if I start asking you some
No, please.
Really
but
pointed
first, let me just say thank you for
question?
hosting. I really appreciate it. And before we do,
Yeah.
we just mention where we are?
Oh yes. Oh, thank you.
Yeah. So let me just tell you, we are
Please, go ahead.
we are at 141 Willoughby, which is a new commercial office building developed by Savannah in downtown Brooklyn. It is, Brooke and I spent a little time prior to this talking and remarking about how beautiful this building is. By far the nicest office building in downtown Brooklyn,
Yeah.
by factors of 10.
Yes.
So it's a beautiful space. We're lucky to be here. They're kind enough to host us. So if anyone's interested, they should come and take a look at it for sure.
Yes, it's 24 stories,
Yep.
right? Full block, floor to ceiling glass windows, which you can see a little bit of right here.
Yeah.
Amazing view in Brooklyn. It is really, it's really a special place.
It is.
So thank you, Savannah, for having us here. Jamie,
Yes.
I'm going to jump in. We're going to do this. Okay, so I want to poke around the mindset of someone who was not in real estate and then magically one day woke up and said, I want to be a real estate developer.
Mm-hmm.
So walk us through how you came to the decision that you were going to shift your life from what you were doing to this.
Okay. It wasn't so binary in that regard. So as you mentioned, I'm from the South originally. I went to university in the University of Tennessee,
Mhm.
I worked at Merrill Lynch for a couple of years in Knoxville, Tennessee. I knew I wanted to come up to New York City because I felt, as everyone does who's in New York City, I feel like if you want to succeed in something, New York is the place to do it.
Yes.
You know, if you can do it here, I feel like you can apply that anywhere.
Yes.
All right, there's a song.
A little song.
A little song. So I came up to New York. I was doing the rounds of interviews at banks.
Mhm.
I almost took a job on a derivatives desk, and this was in the early 2000s, so 2001, 2002. And it just so happened I met Chris Schlenk, who runs Savannah. And at that time, Chris was running Savannah. It was a small company. It was about 5 of us. And he gave me the opportunity to basically become a secretary for 2 weeks while his secretary was out of town on vacation.
My word.
And instead of taking this job on the derivatives desk, I thought this seems a lot more interesting. Chris is super personable and dynamic. So I decided to sit at the front desk at Savannah for 2 weeks, and I kind of just put my nose into everything. It was an easy decision because I didn't know what a derivative was, but knowing that I didn't know what a derivative was, and I wasn't excited about the idea of becoming a banker. The little I learned within 2 weeks of real estate working there, I knew that was a lot more interesting. I didn't have any other prospects, frankly. So I just said, "Can I stay here?" And he was like, "Sure, there's an empty desk. You can sit here." And then he just started putting stuff on my desk, and everyone in the company just started putting stuff on my desk. And then I just kind of, worked for essentially nothing for almost 2 years.
And how did you survive in New York in that period? Like, how did you do that?
Yeah. So the first 6 months, it was, I was staying at my parents' house, staying at friends' houses.
Yeah.
And then, after I think Nick and Chris at Savannah felt like, okay, this guy's not going anywhere. They let me kind of figure out, they own properties. So, and I was managing some of them peripherally. And one of the properties had had basically what was a storage room at the time, but in a prior life, it was a caretaker's apartment for a museum. And everything had been ripped out, but there was plumbing lines that were stubbed up. And I was like, I think I can make this back into something that I can live in. So when I went to Chris and Nick, and I was like, "Can I just stay here and I'll build it out myself?"
Yeah.
And he was like, "The storage room? Yeah, sure. Go ahead." So
you love real estate.
Yeah. So I had someone help me, but basically, plumbed up and created an apartment and a storage space and a huge 20,000 square foot event space in Soho. So the location was amazing.
Yeah.
It was like a really quintessential New York City thing.
Yeah.
So
you asked. Cool. You just asked.
I just asked, and it was a
Can
storage.
I do this?
Yeah. It was a storage space. So they were kind of like, sure, you can live in a storage space if you want to. But I ended up living there for a couple of years, which helped. And then obviously I integrated, firmly into the company. And for 7 years while I was there, I just really I learned a couple different things. I learned that I loved real estate. I learned that I loved to work. I loved to go out with my friends. Unfortunately, at times, maybe too much. But I was in my 20s, I could handle it. And that's where I cut my teeth. Right. So, and at the time, it was a fairly small company. Over the course of those 7 years, we grew from being like a residential developer to a fund manager. And then after we had deployed about 90% of Fund 1, I left. I wanted to do something different. It was coming out of the GFC. And at the time, we were buying notes and stuff like that, debt. And that was less interesting to me than development. Development really wasn't possible then, if you'll remember. It's just, there was no development going on. But I left because I wanted to get back to that. And about 18 months later, after a little stint with my wife, I started Lonicera.
You traveled around Europe, right?
I did.
For a little while.
I did. My wife and I got married, and then we were planning our honeymoon. I had left Savannah, so I had no job. And so, of course, she's an attorney, and she had a very stable, good job. But of course, I'm at home by myself with no job, thinking about what can we do for a honeymoon? And it went from oh, let's go here,
Yeah.
maybe 2 weeks. Oh, but we need a month to do this. And then eventually she was like, maybe I'll leave my position too, and we'll just do this.
Oh my.
And we were in the fortunate position because we didn't have a mortgage, we didn't have
Yeah.
kids. We just got married. And for 18 months, we traveled around Europe.
So you just had an adventure.
You had an
You had an adventure, but you were in love with real estate at that point as well.
Definitely.
So you came back.
Yep.
You did. You ultimately came
Yes,
back because you're
definitely.
here
I mean,
in
I was looking
Brooklyn.
at real estate, like,
You're on your
and with the
honeymoon,
way-
and
yeah, we were like looking at real
can I
estate.
buy an apartment here? Can we buy this building? Like, yeah.
Absolutely. Inevitable.
Once you're a real estate person, you are literally in every building analyzing everything around you.
And looking at the angles of how it could be better.
Yes,
all the time.
exactly. So then you founded with partners
Yep.
in 2010-11,
Yep.
Lonicera.
Yep.
And Lonicera, originally, if I remember properly from our early meetings,
Yeah.
you were really focused on a Brooklyn thesis.
Yes.
Very early
Yep.
on. So walk us through, what was it, like serendipitous? Like,
Yeah.
I just love Brooklyn and I'm going to focus all my energy here. Was that how it kind of happened?
I mean, kind of.
Yeah.
So I had gotten a base understanding of Brooklyn at Savannah. We had developed a building in Williamsburg.
Mhm.
When I was there, I had kind of kicked around downtown Brooklyn looking at properties. We never did anything here until they did this,
Mhm.
much later. But when I came back from Europe and I was looking at just things to do, I was really trying to find development sites. So I had relationships in the industry. So what I was trying to do is basically find a development site and partner with an established but young and small company to co-develop it, to basically earn my stripes as a developer, my own entity. And I did a lot of research. I did a lot of research up and down the Brooklyn coast. And it became very, very clear to me very, very quickly that downtown Brooklyn was really, really poised to receive a lot of density. And the infrastructure here is fantastic. Like, 13 subway lines. You've got, university systems that are here. You have cultural institutions that are here. So outside of like the core centers of Manhattan that you think of as like called the CBD of the CBD, downtown Brooklyn is really the only one that has the 360-degree infrastructure outside of the borough of Manhattan. Like you have other places, but downtown Brooklyn is it just has so much. So I looked at that and I was like, okay, this is a place to kind of try to build a business around. And you could see it then, you could see the trajectory. And then I met my partner, Dimitri Yatrakis. He and I were both kicking around a development site who at the time, I didn't know he had it tied up or his father had it tied up. It ended up becoming our first project, but a mutual friend introduced us.
And you became like fast partners from there, right?
He and I sat on the corner of Atlantic Avenue and Smith Street in a diner. We talked for like 3 hours. We walked around the neighborhood. We walked around the site, and we shook hands as partners.
And
literally after 2 or 3 hours.
Okay.
It was a little bit of Pollyanna, right? It was me being eager to start something. He's younger than me. He was eager to get into business.
Yes.
We like each other personally as friends.
Yeah.
So it was kind of like, and I think both of us saw like, oh, he's got a head on his shoulders. Like, why don't we do this together? So just
let's just figure it out.
Yeah. So, I wired him some money the next day and then all this stuff.
Here we are.
Where it went, but,
Jump, jump right off the cliff into it.
Totally. So I became his partner, within literally 48 hours from meeting him on 267 Pacific Street.
Well, your intuition turned out quite spot on, right? And
100%. Absolutely. And then within like a month, we met John Evans, who's our third partner.
Yes.
So Dimitri came from a family office that owns walk-up multifamily stabilized stuff. And their whole, like a lot of the real estate families in New York, a lot of it is, their business is really tied to renovating rent stabilized apartments at the time when you could do it. And then 1031ing and just kind of like rolling into a bigger portfolio. And they had done it really successfully over the course of 30 years. And John came from Siami Construction.
Yes.
He ran their development arm.
Yes.
He was just completing development on his own Atlantic Stand on Atlantic Avenue. It was a little 20-unit multifamily building ground up. He built it through the GFC, and he got the bumps and bruises along, but he completed it.
Yeah.
And he was able to sell it and make some money, which is super impressive in and of itself at that time. And then just the three of us talk about serendipitous. We just had such complementary skill sets. We had different personalities, and the first conversations we were having with limited partners and with banks, one of the first questions they asked was, "How do we know you're going to be partners in 6 months from now?" And it was just serendipitous, to your point, that we just we definitely bump heads, but we bump heads in a really productive way.
Yeah,
we challenge each other.
Yeah.
And that's what's caused us to have such a successful partnership over the last 14 years.
And this is from the outsider's perspective, so I want you push back on me if you feel differently. But from the outsider's perspective, what I always noticed in your three, sort of that way that the three of you come together, is there's a really deep trust and openness.
Totally.
Which is really interesting, because I think for folks who have been around commercial real estate in particular for a long time, there sometimes is a belief that everyone plays it really close and everyone is really closed off, and it's a very suspicious place. But what I always experienced in interacting with you, because we interacted in business conversations, banks and developers are constantly speaking with one another, and I was once upon a time in a bank. So when we interacted, there was always this trust dynamic, which was quite unique.
I think 100%. And I think one of the, I've taken a little bit of time and been a little bit introspective over the past couple of years, and reflecting on the past 14 years or 12 years at that time, of just like, what have we done over the past 12 years that have made us successful? And it's gone unspoken for the most part, but I think we have kind of silently built a business around a couple different fundamental values that we have, independent of one another, really cherished, but just so happen that all of us cherish the same things. And one of those things is trust, and being 100% honest. And if that means bluntly honest, it means bluntly honest. Being kind, being super, super kind. Having respect for the people that you're working with or for. You kind of work for everyone ultimately as a developer. People look at us as the client, but we're not the client. We work for everybody.
I love the way you said that. You work for everybody.
Yeah, totally.
You really
we work
do.
for the bank. Oh, totally. I mean, we have so many masters at all time. It's true.
It is servant leadership, which we got into a very similar conversation with someone else who's been incredibly successful in their own right in real estate. And the way that you show up, and you showing up for others as opposed to showing up for yourself, is a make or break in your success.
Totally. And it's allowed us to create a niche when we had no business creating a niche. So But
who gets to decide who has the business creating the niche?
Who
gets to decide that, right?
Yeah. I mean, it's a good question. It kind of happens naturally, or it doesn't. We were lucky enough for it to happen naturally. But so the landowners that we spoke to, we treated with great respect, and we treated, we approach people who we want to partner with. We definitely approach all deals with the life is too short mentality right off the rip. So if we feel like this person is not exactly, I'm not feeling it, we don't even spend time thinking about it anymore. It's just move on to the next. There's a lot of real estate in New York City, so there's a lot to do. And then we treat, our business has primarily been built upon, as I was saying, what allowed us to create a niche when we were in business creating a niche is we were hyper-focused in downtown Brooklyn, and we spent an enormous amount of time creating relationships with a lot of the landowners. And a lot of these landowners are unsophisticated in a typical sense, in the real estate sense, unsophisticated families. And, they had a metalworking shop that
they just happen to own the property as well.
Totally. And that was absolutely incidental to the fact that they had a business. And now the real estate is worth multiples of what the business is. And then, as we were starting the business in 2010, 11, 12, 13, 14, it was really the first time that institutions took notice of downtown Brooklyn. And so you started having some capital flow into the market.
Whereas before, none of the investor community was really paying that much attention.
You had a couple people that were poking around in here, but it really wasn't much. But with that institutional capital comes the brokers and the intermediaries. So you had all of these brokers that flooded the market, that were contacting every single landowner, just blowing smoke, just complete blowing smoke, just trying to get the listing and trying to create business, which is what they need to do and that's their job.
Yeah.
But subsequently, all these people, all these families and these people that have owned these properties for 30 years are like, what do you mean? My property, I bought it for $100,000 25 years ago. Now you're telling me you're worth $5 million? Like, I don't even know what to do with that information. And then of course everyone gets really nervous. And like, they don't trust anyone. And so we spent a lot of time developing trust with those people.
And you went like property by property, chatting with folks in the community, and we're here, we're trying to figure out what to do.
I've knocked on so many doors in downtown Brooklyn directly myself. I mean, John, Dimitri, and I also, we have a tendency to, and this is not a good thing, we don't delegate well.
Thank you for your honesty. Thank you for saying that.
So
usually like, I'm going to go knock on the door.
I'm the one who's knocking on the door, talking to whomever. But it allowed us to create the sense of, that we're trustworthy.
Yes.
And then people would want to transact with us. But it took years, like literally years.
But that relationship building, and that you had, when you gave me a little snippet of your bio, I want to relay this to everyone because I loved this little part, which is your ability to work with some of the most complicated and interesting personalities. Is
difficult.
You said it. I said I was trying to be really polite, but you said difficult. Truly difficult personalities. Your ability to figure out how to meet somebody where they are, accept non-judgment. Hey, I'm just trying to sort this opportunity out with you. I think is one of the things that really propelled the business forward, because you can sit across, I've seen it. You can sit across the table from anyone you need to sit across the table from without judgment.
Yeah, totally. 100%.
And that's a skill. I think for a lot of folks who are listening we think we just show up and then we get a deal done. Real estate developers, you show up and you just get a deal done.
Through bravado.
Wheel and deal. And that's that's not at all how it actually works.
No. It's a process of psychology. And that seems cynical, but it is a process.
You're almost a therapist.
You kind of are. You really, to do what we do I mean, to be exclusive in that statement, but to spend years assembling sites with multiple different owners, with multiple different agendas, different timelines, and have them coalesce around a single project on a single timeline that we're defining. It's a process of like really unpacking what people want, spending a lot of time to understand what they need, and then helping them get there. A lot of, you were just saying, a lot of people blow in and try to, get deals done through bravado and bluster. And that may work for some people. But it's not my personality. It's not our personality. And we've always found that our hit ratio is incredibly high because the effort that we put forth is a personal effort with the person in front of you. So you're creating ties. And when you do that, I think you're more likely to transact with that person ultimately, whether it's tomorrow or 2 years from now, than if you come in and just start blabbering bluster. That seems self-evident, but it's kind of, to your points, it's not a lot of people do it.
It is, I think over time we all thankfully collectively are realizing the value of, how do I connect with other people? And if I connect with other people by screaming, that in the short term may help me for the one thing I need to do right now.
Right, and make you feel like you accomplished something.
I've done something. I moved that ball forward. But what you've realized is in 14 years, you've built a huge
we have
portfolio
we've built
by being kind dudes. Who are trying to sort things out across the table with someone in a very solution-oriented way and give them tons of wins and you get wins and everybody is, I mean, it's not easy.
No.
You're not doing a happy dance at the end of every negotiation,
and it's tortured. It's absolutely tortured. It just is. It's the nature of the business. So it's, it's nothing is easy. I mean, we're working on a few different projects right now that we're trying to acquire or partner with folks, and it's tortured. But, tenacity, positivity,
Yes.
You know, and keeping your head on your shoulders about it and having perspective. But you know, the industry, New York is huge. It's so funny. I ran into a guy who was an intern for us like 8 years ago in the subway yesterday. And he texted me afterwards. And I texted him, I was like, New York is huge, but it's also so small.
Yes.
And the commercial real estate business in New York is tiny.
And so if you say that about New York, imagine the rest of the United States.
Totally.
Everyone at some point in time comes across
Yeah.
other folks over and over and over again.
Everyone's looking at the same properties.
Yes.
So you're bumping into people that, you know, whether you're bidding on properties to brokers or whether the same people are doing it.
Yes.
There's only so many players that are effective consistently.
Well, so the thing that, and you tell me yes or no to this question, but the thing that I pick up on, and one of the reasons why I wanted to have you chat with me and all of our friends today on the internet, all of our friends. One of the reasons I wanted to do that was because I think that there's two real ways to approach business and life. One is with an incredible level of competitiveness, and the other is with an incredible level of collaboration.
Yep.
And it's not one size fits all. It's not like you're all one or you're all the other, right?
They're not mutually exclusive.
Exactly. But there's sort of these general ways of approaching life. And I think that there's a misunderstanding that real estate developers only approach it from a very competitive manner.
Definitely.
And what you're saying, though, is quite different, which is to actually be incredibly effective.
Yep.
I've had to be more about the we and not about me and how I am going to be the best real estate developer that ever existed.
Absolutely. That's 100% true. And that may be a function of having, the three of us starting this business with independently nothing, right? So like we weren't leveraging, one of our families or we weren't leveraging like a partner that was giving us seed capital to, raise our wings. It was just three of us in a room, scrapping and scraping together deals as we could. And I don't know how successful you could be in that situation by being just driven by competitiveness. Like you have to earn your stripes by giving up a little bit. And that is really the foundation of collaboration, is giving up. Like giving some. That intuitively you may want. Right? Collaboration is not taking it, giving it to somebody else. And that is the grease that basically propels deals to happen. Right? That is what allows deals to happen. I think leaving something on the table is an important part of every single successful deal.
And re-narrating, I'm adding some words, you tell me if you agree or not, but it's almost like re-narrating that by offering a win, that there's nothing weak or there's nothing weak about offering the win.
Totally.
It's actually one of the strongest things you can do is figure out what the other person really needs and meet them and how you work through that process, as opposed to it's mine, and I won't budge, determines your ultimate success in the business.
100%. I think another way to think about that is everyone we deal with at Lonicera, we consider as a partner. And the length of that partnership may differ. Vary, right? So if we're buying a property from someone, the person that we're buying the property from is our partner while we're working with them to acquire that asset. When we close, they're no longer our partner. But as you're working toward a closing and certainly negotiating a deal with them, you have to look at them as a partner, because if you don't understand what they're wanting, what they need, what they're angling for, the likelihood of you getting that deal done is lower. So it's, our lenders are our partners. Our partners are our partners, obviously. But, our contractors are our partners. Our geotechnical engineer is our partner. We're coming together with the common goal of either of acquiring, creating a business plan, and executing on that business plan. They might have a sliver of a responsibility within that, but they're part of the partnership. They're part of the collective that has got that single goal.
Yes.
And I think in development, and my partner John is really good at this. In development, it's very easy, and it's to your point, the whole idea of competitiveness versus compassion. It's a lot of developers approach the business as what I say goes. And you know, even in development, you're talking to architects and engineers, and it's more like rule with the whip.
Yes.
And, you know, who can I blame for the problem that just occurred?
Who gets to get beat up over this?
Totally.
Yeah.
And I mean, I've been in those rooms, and I've been on that side of the table before. And what we have learned collectively, and I think John was kind of the seed of this, is like, it's a horrible way to do business.
Yeah.
It's a horrible
Nobody
way.
wants to come back
Nobody
for
wants-
rounds. Maybe they'll come back for the first 2 rounds.
Right. But ultimately what that ends up, you end up disincentivizing people.
Yes.
They don't want to be a part of the team
Yes.
anymore. And as soon as you lose members of the team, you don't have a team.
Yeah.
So,
And there's not enough money you can pay them.
No.
Or enough smoke you can blow at them
Yeah.
that helps them say, oh, no, this is fine. I actually really enjoy this.
Yeah.
And there's not-
But that also goes back to what we were talking about before, is life is too short.
Yes.
You work with people that you trust. Can I curse?
Yeah, yes, we're going to apologize to everyone, but go.
Shit happens.
Yeah.
And there will always be problems.
Yes.
The best people in the business
Yes,
make mistakes.
they do.
Um,
And then they talk about them.
exactly.
Yes.
And their learnings.
Yes.
Hopefully.
They should. They need to. The good ones.
Totally.
Yeah.
But you know that. So
Yes.
instead of whipping someone for having made the mistake,
Yes.
let's all come together and fix it.
Yes.
Doesn't that seem like a more productive way to handle this?
Well, it seems to be working pretty well as based on the size and scope of your portfolio at this point in time, right? From 14 years ago, 3 people who were just coming together and starting literally on their own with no pot of gold behind you to, I think, it was at over 1 million square feet that you've developed at this point in New York City, 1 million square feet. This is you're kind of a big deal. Kind of you're always gracious about it, but I'll say it here because you won't say it yourself. I'll say it. I want to talk a little bit about individuals. So there's different ways you can come into commercial real estate, right? So I want to just hone in on, we're talking about real estate development right now. And there are some people who are listening who are saying, yes, I've always wanted to do it and I don't know how. There are others who are listening to it and saying, I don't want to be a real estate developer myself.
Yep.
But does that mean I could never be a real estate investor? Does that mean I could never be involved in if I'm not in development, does that mean I shouldn't be coming into commercial real estate or real estate in general? And so I wanted to kind of throw that on the table in front of you and say, let's help some folks who are listening to this and saying, I really like real estate, but I don't necessarily want to be the builder or the developer, or I might just want to invest.
Yeah, I don't blame.
That's he said himself. Don't do it.
Yeah.
And because it's so for anybody who's listening to this, if you haven't internalized yet, that it is hard work. Like we have not done our job. If you haven't figured out how hard it is to be the actual developer sitting in the developer seat, if you still want to do it, you've been warned. There is danger ahead. But if you're not interested in that, if you don't want to be in the developer seat, but you might want to be an investor, where does that person start? How do they come in? Because they have no idea. A lot of folks have no idea how to come in.
I mean, I think there's a lot of different ways to do it. Someone who I work with at Lonicera, Lucian Cohen, he and I have spent a lot of time thinking about this, and he's a very good financial mind.
Yes.
And he's very detail oriented, but he, working through the different avenues of finding places to invest within commercial real estate, there's so many different ways to do it. I mean, you can, if it's just simply like you can go and buy, equity residential, stock. You can buy a share of a REIT.
Yes.
You can go and invest into Blackstone's, fund.
Yes.
those are more retail oriented investments. But those all give you exposure to real estate.
Yeah.
There's different risk levels to everything. And
Always.
yes, I think the first thing to do is just learn, learn, find someone that you trust that understands it and knows it, and ask questions and ask opinions and read about it. And then ask questions about your opinion on this. It's very iterative. It's no different than learning about anything. Just learn it. But I don't mean to beat the dead horse here, but speak to people that you trust.
Yes.
People that you can have faith in and that are going to guide you soundly and are not going to benefit from your transaction.
That's a really good point. Yeah. It's someone who is actually there to help you understand and tells you the good, the bad, and the ugly, and doesn't just say, this is all great. Pedal to the metal. Passive investing for the win, just do it. Like that's not someone that we would necessarily advocate, is doing it with your best interest in mind, because there's a learning curve. You need education on this space, or else you can find yourself realizing that you got in over your head because you thought you were going to be able to do some of the development yourself. And we've seen this where someone comes in and says, I'm going to buy the real estate myself, but I kind of want this to be a part-time gig. There's that, which can really, it's a lot. Like, you've lived it. It's work. It's real work. And then there's I'm just going to give money to X and then go to bed and not think about it. You're abdicating your responsibility and your accountability and making sure you understand really what you're getting yourself into.
And there's levels of risk associated with that, right? So like, if you just want to put your money somewhere and it be in the real estate space, there are safe ways to do that. Buy
VNQ, ETF, have fun. You're done.
Buy EQR.
Buy EQR. You're done.
Those are predictable things that are easy to digest, understand. But I think once you get into the whole like, oh wait, there's passive investments or tax efficient, blah, that's a different level of understanding that if you don't have, you can really get hurt on. And that's where I think you need to rely on people that you trust and that you can guide you soundly and with your best interest in mind. So
now for a moment, let's talk about the individual who says, is it too late for me? I am now mid-career and I've always wanted to be in real estate, but for some reason I just have never pulled the trigger. I'd like to invest. I want to understand this. Is it ever too late?
No, absolutely. Okay. I mean, we're not, soccer players. We're not vying for Olympic, gold here.
Our body doesn't need to be in a, we try to stay healthy as best we can, but our body doesn't need to be in peak form.
Right. There isn't an expiration date for anyone's interest and anyone's ability to find success in real estate. So I guess simply no. I would, if there's interest in it. So my partner Dimitri and I, he went to Columbia University, and they've asked us to come a couple of times and do like a speak to the the grad school or business school or something like that. This is way above my head. So
you're like,
I went to University of Tennessee.
Am I qualified to teach this? You're like, I just built a million square feet. I don't know. I have a lot of those moments too. Am I allowed to talk about that?
Totally. But these are like the smartest kids in the world.
Yes.
Sitting on the pedestal of an amazing, with great privilege. And they're in school for real estate.
Yes.
And they're like, should I do it? I'm like, what do you mean?
You are prime.
Yeah. Isn't this what you're supposed to be doing now? Like, no, but what
do you think psychs people out? Is it the unknown? Is it the fact that it's just such a, like, you have to kind of just figure it out? There is no guidebook.
Yeah, I think so. I think definitely that's a big part of it. I also think that a lot of people try to find the perfect moment to do something. And it just doesn't exist.
No. Unfortunately.
Unfortunately. And I mean, it's over preparedness is not preparedness. That's an
amazing phrase.
It just isn't.
Yeah.
Because if that's the goal, you're never going to do anything,
Yeah.
because you
Yes.
will never satiate that need of being prepared, or that sense of preparedness.
Yes.
It's not possible.
No.
So a lot of it is just rip the Band-Aid. Go.
Yeah.
Go.
And then fall on your face a little.
Totally.
Actually.
And just be ready to tack and move. And you know, I think whatever that saying is like, as soon as you have a plan, that plan is no longer your plan, or something
Yes.
like that. Like,
Yes.
it's definitely true.
Yes.
Like, as soon as you go into a situation, especially in real estate, especially what we do, it isn't linear. And as soon as you think like, oh, I'm going to plot out 5 steps ahead, you take half a step and erase the entire thing.
Yes.
So
Start again.
Yeah, you have to be nimble and don't get. I think one of the biggest problems is a lot of people want certainty,
which we will never be able to obtain in this space.
Never. So that idea of like, I know what's going to happen, and I'm going to do everything I can. I'm going to do the most diligence I can.
Yes.
I'm going to speak to everyone that I can.
Yes.
And I'm going to button this up, and it's going to be beautiful.
Yeah.
Never going to happen.
Nope.
You can just blow that up.
So there's a lot of intuition which just comes from your seeing and feeling and experiencing mistake after mistake after mistake, which is how you develop your intuitive muscle.
Yeah, totally.
It's not from planning it out perfectly and then executing the perfect plan.
This is not a rote business.
No.
It is not a rote business.
Wouldn't it be amazing though?
Yeah,
Wouldn't it be amazing to be like, and now you too can study this track for 12 years and be the most excellent ever doctor of real estate who can be the best developer that ever was, because you'll never make a mistake.
Right.
Thankfully, we're not doing brain surgery, which is nice, right?
Yeah.
So we have the ability to figure it out on the fly and to make those mistakes.
There are definitely God complexes in our industry.
Oh, just a couple. We won't name names.
No, but that's right.
Just a couple.
But that's right. Like, this is not, we're not doing brain surgery. This is not a mechanical business. This is a very fluid business.
Yes. And it's a people business.
It's a people business. It's markets move all the time. Pricing moves all the time. Every single site, whether it's that one or the one next to it, is going to have a different site condition that you have to deal with, independent of what's going on around it.
Yep.
Investors are all different. Needs are all different. Owners are all different. You know, your end consumer is different.
Yes.
Banks are different. It's literally every deal. I was having a conversation with some of my friends a couple weeks ago, and they're private equity, and one guy they're all highly successful guys, and it was an interesting conversation. They're older than me, so they're kind of like at a second stage of life.
Yes.
And I'm like, oh gosh, I can't wait. I hope I can get there one day. But to hear their perspective on like the mindset of saying like, there's so much that's going to go wrong, and to have the perspective of knowing that, and just saying move forward. Don't get bogged down with what happened wrong.
Yes.
You know, find the next right thing.
Yeah.
What is it? I keep on going back to these anecdotes. I'm sorry.
No, we love anecdotes.
Who's the tennis player? Not Rafael Nadal, the Swiss guy.
Oh, I'm sorry, and his name is escaping me. Yes, I know. Okay.
Anyways, he just gave a college speech, and he was like, I was the number one in the world. My percentage win was 53%. So essentially half the time he lost. Yeah. And to be able to like ignore that. Yeah. And just focus on the next play. Yes. Is what differentiated him and allowed him to be number one. Yeah. At 53%. At 53%. At 53%. Right. And that's so the fear of making mistakes cripples a lot of folks. Yes. And this is a mistake business. Yeah. You're not hopefully making mistakes that are so large that it's going to. And that's where transparency comes in. Exactly. Yes. Oops. Guess what? That went sideways. I'm accountable. It's right. That's totally. We have to. That's the life you live. Yep. And then how you build. So for folks who are listening and thinking about, and I got a lovely text the other day
from someone who had been listening in and said, I'm listening in for my daughter who's little. So as we're building the next generation up and thinking about real estate,
Yeah.
I think the best thing we can do is make sure that they understand that if this is a business that they're interested in,
Mhm.
if you're really interested in the real estate business, be prepared for nothing to be linear. Be prepared to pivot on a dime.
Yep.
and not be too rigid in your approach. You have to just bounce back, and we can talk about resilience, and we all know what resilience is, but how do you build that? How do you build that in someone? And do we need to start celebrating mistakes constantly with our children? Like, yay, good job, you tried that thing.
I think so.
Right?
Totally.
And
It's a great quality.
It's a really important quality.
And it's a positive quality no matter what you do.
Yes.
Like, it's
Yes.
Positivity.
But especially here.
Yeah.
Especially here.
Yeah.
I want to leave space for you to talk about anyone, speaking of mistakes or difficulties as you're going through a development process. Do you want to tell us all about any of your projects? Do you want to tell us any stories about any of your projects that folks wouldn't know yet? Is there anything that you want to highlight ongoing, or anything that we should dig into that's a good lessons learned maybe from the mindset of being a real estate developer?
Yeah. I mean, I can tell you the projects that we have going on right now.
Fabulous.
Yeah.
Yes.
Let's. Yeah. So we actually just started leasing 17 Hanover
Mhm.
House, which is just a few blocks away from here. It's a 315 unit multifamily building, 34 stories.
Awesome.
It's a beautiful building. Fogarty Finger was our architect,
Mhm.
Arshad Pillai and Chris Fogarty.
Weren't the architects here too?
They were.
Yeah.
Yeah.
Yes,
That's right.
They
That's
were.
right.
I study.
Yeah. It's a good
I
building.
did my homework.
And we just started leasing a couple weeks ago.
Mhm.
You know, the market is incredibly tight. New York City
In multifamily.
in multifamily, yes.
Yes.
I mean, asset classes are disparate from one another.
Yes.
Multifamily is specifically, it's why we kind of focused on it as a business. It's a very good business to be in.
Well, you keep delivering new supply, but the demand is always higher
Yeah.
in New York.
Yeah,
You
especially in
just
New York.
keep delivering new supply, but the demand is always huge.
Right. I mean, New York has a history, a really bad history with
Mhm.
not enough residential development. And
Mhm.
subsequently, we all know this, it's too expensive.
Yes.
Homes, whether you're buying or renting, it's too expensive.
Mhm.
But as an owner, operator, developer,
Mhm.
investor, we can't change the market
No,
independently.
single-handedly.
No,
No.
not at all. So we rent the units for what we can rent them for.
Mhm.
But I think every single developer will acknowledge that right now rents feel unsustainable.
At the levels that were in New York as we're seeing.
Correct.
Mhm.
Um, it feels unsustainable. That doesn't mean it is unsustainable. And what is interesting, and I'm pivoting away from the building, but more
Yeah.
market wide, is that when you look at the data, there is so much the housing consumer in New York City has much more purchasing power left
Mhm.
than what they're spending today,
Mhm.
generally speaking,
Wow.
which is kind of an amazing concept, right? So like average one bedrooms, $4,500 a
Mhm.
month, 4,800, 5,000, whatever it is.
Which, if you're outside of New York, is sticker shock
It's sticker shock.
for a one-bedroom apartment.
Totally.
Yes.
I mean, back in 2003, when I was looking for an apartment, it was like $1,500.
Yeah.
Right. So
Yeah.
in 20 years, it's tripled.
Yeah.
But it's, anyways, but the general rule of thumb for a healthy, rent payment to
Yes.
income is you want to make your income to be 40 times the monthly rent payment.
Mhm.
That's kind of like a generic rule of thumb for a
Yes.
healthy market. Right now, across our portfolio, and we've heard it from our contemporaries, from our colleagues
Mm-hmm.
in their portfolio, generally speaking, in New York City, people are making 50x what they're paying. Their rent. So New York City is an island, literally, figuratively, but
Yeah.
like there's a lot of wealth in New York City.
Yep. Yep.
And technically, there's probably a 20% increase in rents that can be absorbed within the market without creating an unhealthy dynamic between the consumer and the product.
Mhm.
And that's astounding.
That's
right?
it is wrapping your head around it when you're not in this market.
Right.
I think for a lot of individuals, it's shocking when you're not here.
Totally.
When you're here, you're like,
Makes
okay,
sense. Yeah.
it makes, I get it.
Yeah.
But when you aren't living in those numbers,
Right.
It's a shocking.
Especially coming out of COVID when everyone was like, New York City's dead.
Oh, yeah, I remember that.
Yeah, right. The
Yes.
flight of capital out of the city where all
Yes.
the institutional investors were like, oh, I'm going to go to the Sun Belt.
Yeah.
Now the Sun Belt's overbuilt.
Yeah.
Rents have plateaued or declining.
Yes. Yes.
Vacancy rates are over 10, 15%.
Yes.
So, and then you look at New York City,
Mhm.
rents have increased 25%.
Mhm.
Vacancy rate is 1.8%,
Yeah.
2.4%. And the consumer can still pay 20% more
Yes.
on average.
The
be healthy.
jobs. So I love statistics,
Yeah.
and I'm so happy we're going into statistics because you know me, this is my economics background kicks off really fast. Everyone loves to talk about how New York State, New York City, everyone's fleeing.
Yeah.
I actually pulled US Census data because I had to see this myself, economist here, I got to see this stuff myself. And when I pulled the data, I was able to actually get this beautiful little graphic to put this beautiful little graphic together back to the early 1800s with the population shifts between the Northeast, Southeast, Midwest, and Far West, right? So it was this beautiful little graphic. And no, people are not all leaving New York State.
Yeah.
They're not leaving New York. They're not leaving New York City because there still is a hub here
Yeah.
of financial activity, of tech activity, of real estate activity that keeps the economy going and where high paying jobs exist.
Yeah, totally. And culture.
Yes.
Like in your 20s, what other city would you want to go to?
Where else can you go that you get the deepest diversity of culture
Right.
outside of New York City?
Yeah, it just doesn't exist.
Mhm.
And
Mhm.
it feels very rote for us to be saying this. We're New York.
We're sorry, yeah, we're biased just
Yeah.
a little.
But we're saying it because
Yeah.
it is true. And the
Yes.
data's backing it up. The numbers back it up.
The numbers aren't lying.
You
Yes.
can't really flub these numbers. There was an interesting statement that someone made, and I'm not sure if it was Leon Black or someone else was talking about how Google worldwide
Yes.
sent a poll to all of their employees worldwide,
Okay.
and it was under 40,
Mhm.
and one of the questions was, if you had your choice of any city to go to work
In
at
the
Google,
world.
in the world,
Okay.
and this is people all over the world, where would you go? It was something like 70% of the people said New York City.
Yeah. Yeah.
I mean, it's very intuitive, but when you hear those sorts of things, it's like, of course, yeah.
Yeah. And so from a real estate perspective, so we live it every day, and we chose to come here, and you and I both had different paths in real estate, but ultimately we both were like, real estate, this is really cool. This space is really cool. And once you fall in love with it, it's really hard to fall out of love with it because it just becomes something that we all have to live somewhere. So you get it. You start to feel it in your bones. And you all know that I'm working on a rebrand for commercial real estate. I want it to be called community real estate. You heard it here first. This is my marketing plug for this. Because residential real estate, residential as we think of it, is single family homes.
Yep.
What is commercial real estate? It's where the community comes together. It's where
Yeah.
people meet and mix and mingle. So it's all the other buildings where you're not sitting in your little family unit, but you're with other people. So it's office buildings, retail, it's entertainment venues, it's multifamily because you're not hanging out just with your family there because all your neighbors share your walls, right? So I think that once you fall in love with it and then you have the opportunity to see it in the New York context, you get real estate from the New York perspective. That doesn't mean you have to run here to New York.
Yeah.
But we're asking intellectually for folks to see why so many people do come to New York.
Yeah.
You personally don't have to. Your experience might be different, right? Someone else's experience is going to be different. I don't like New York City is a fine thing to say if you don't like it.
Yeah.
But from an investor hat, or I'm trying to learn a lot about an industry hat, there's no better place to study it than here.
Yes.
There's no better place to put money than here, because this is where the agglomeration is happening, where all of that's economics terms again, where everybody's coming
I don't know
together.
what that means.
Agglomeration is a place. Isn't it hilarious? I love this term. It sounds so fun, right? And here's the comedy part, so you bear with me. But it's a place where so many people come together that serendipitous sort of bouncing of ideas is bound to create something more than if people are living rurally.
Yeah.
Right. So basically, just by virtue of putting people together closely and densely, you're going to have an agglomeration effect. You're going to have something that's going to be more than it could have been. Market growth, new idea generation, business building. It's just going to happen because you smushed a whole bunch of people together.
Absolutely. Wasn't that kind of like the foundation of WeWork? It was like shove people into a tight space and stuff will happen.
See what happens. Yeah. And so cities, WeWork, we'll hold it aside as an experiment. Other things happened. The experiment didn't fail, though, but other things happened in terms of the way that the business was structured. But real estate's been proven now, community real estate, especially urban, dense real estate, which is where what you focus on is urban, dense real estate. That's been proven over and over to be places where people just want to be.
Yeah, and it's nationwide. It's I mean, we're talking a lot about New York, but to your point, it's the housing problem in New York is kind of it's extreme.
Yes,
but it is very much a reflection of nationwide. There's a housing problem, and obviously all cities have a problem. But even suburbs, there's just not enough housing in the United States.
Yeah,
and with rates where they are, you have a lot of people that would have naturally attritioned into becoming owners of homes that are trapped renters.
Yes.
So that has put additional pressure on the rental market nationwide. And it's not going anywhere.
No,
it isn't, because I also think that there's a cultural change, a shift amongst different generations, younger generations, where the desire to own a home for millennials is not the same as it was for Gen X.
Yes.
And certainly not the same as it was for the boomers.
Yes. It's almost as if we've all moved on.
Right.
From that being the way that you generated your family wealth.
Right.
Folks have discovered that you can generate your family wealth in other ways.
And cultural trajectory. It was like something that was kind of like what you did.
Yes.
It was just kind of like, that's what you do. You have your 2.5 kids, you
yes.
buy a home, you go to work every
yes.
day, you have your dog.
And then you retire.
And then you retire.
And that's your nest egg.
And that's it.
Yes.
And that just isn't how people think about it anymore.
No, it's true. It's true. We've shifted quite a bit, haven't we?
Yeah, but we have an aging housing infrastructure in the United States. And
I have the statistics on that too.
Oh, I'm sure.
Fascinating. No, really, I literally just pulled these this weekend. True story. Unrelated to this, but I have them. In the United States, globally, the housing stock, 55% of the housing stock, all the housing stock, is older than 1980.
Wow.
In New York State, it's almost 80%.
Oh my Lord.
In statewide in New York State. So there's tremendous opportunity if you're building new rental.
Yes.
Tremendous opportunity there.
Yeah, multifamily housing.
By the way, we didn't plan that. That was literally the funniest thing. I have to just say, I didn't like.
We really didn't plan much, Brooke.
But we didn't plan any of this. But we both like numbers and data, so I just have it.
Yeah. I mean, those numbers prove out multifamily housing is a hedge. It's a hedge in real estate for real estate investing. Yes. So, like potential investors, they should look at multifamily housing investing really as a hedge amongst other real estate investment types.
Yes.
Because, asset classes generally, all other asset classes are really cyclically driven. Mm-hmm. Like obviously you have condo or for sale housing that's very cyclically driven because it's all rate driven, it's economy driven, whether someone buys a house or doesn't. With commercial office, cyclical, right?
Yes.
Whether companies are expanding or contracting is what drives office demand.
Yes.
Retail, same thing.
Yep.
Industrial, same thing. Less so over the past 5 years as that industry has changed. And that may actually end up becoming very similar to multifamily in that it's more of a hedge because the industry has changed and that demand is so consistent now. But multifamily is not cyclical; it's demographically driven.
Yeah.
So
Yeah.
it's very much a hedge, a cyclical hedge, which is really it's really what seeded our interest in focusing in that space.
And now 14 years later, you can look back and say, I think we did all right, right? I think it was a good bet and remains a good bet, regardless of some of the other noise that we hear in commercial real estate, which multifamily is a part of. Commercial real estate. Commercial real estate is not only office buildings, which when people hear commercial real estate, they say, office buildings are struggling. We have been around long enough that we know that the entire market is cyclical, but the beauty of multifamily is that's the most steady and
it's less elastic.
Yes, exactly. So we are coming up on time. Jamie, is there anything you'd like to leave as a parting word for our friends on the internet?
Well, put me on the spot here.
Offer them it.
No, I think if people are interested in learning about real estate, do it.
Yes.
Don't be shy. Ask questions. Reach out to people you've never met before. I mean, one of the things that I really love the most in my experience in real estate is cold calling people.
Yes, they love it too. Real estate people love cold calls.
Yeah,
we dig it.
We had a retail space in one of our buildings, and I was like, I love this restaurant, and I found out who the restaurant owner was.
Yeah.
I just called him, and the person picked up. Again, no business talking to me. But his response was, I love when people cold call me.
Yes.
Because it just shows that you're motivated and
Yes.
you're ready to do what you need to do to get something done.
Yes. Yes.
So call people, reach out to people, and just dig in and find people you trust.
Yes, the trust part I think is so key in this business, and it's built up over a period of time, and it's typically something you can sort of look at how someone has operated in different spaces, because in real estate there's a lot of different spaces to operate in. But the reason that we ask questions, reach out to people, call, figure out what someone's reputation is like is because it is you said up front, it's a small industry, and you can find out a lot by just chatting. And people will tell you things. They'll tell you really honestly about how something worked, or why it works that way, or here's what happened 10 years ago. And they'll give you really good intelligence if you're doing your diligence on something, you're trying to understand something, but finding the right trusting people really matters.
And it's slow. Like, don't expect to jump in and make a mint. Like, it's a slow business. It's it's a slow business. I mean, developments are naturally, it take years. So it's don't expect to just burn and churn.
You got it. Well, that's so important in the commercial real estate context, because I think most folks' intro into real estate is residential, and it's like flipping conversations, which we don't have here. We have the long, slow churn conversation around building generational wealth by investing in large scale properties. So it's just it's a very different mindset that patience yields you really great outcomes.
It yields dividends over time.
Yes. Jamie, thank you. Oh this was so good. Thank you so much for doing this. Thank you everyone for joining us today. You will, as always, find this here on LinkedIn Live. You will find it on YouTube. You will find it on Spotify, because it's going to be a podcast too. So feel free to check the LegaSHE website out, LegaSHE.com. You'll find a ton of free resources there. Speaking of learning about real estate, we created a guide. We made a guide. You can download it. It's really nice.
Cool.
You have to ask Lucian if you think it's good. You
can
compare it with his guide. But we're really all about here at LegaSHE, we're all about helping folks understand the bigger, bolder cousin of residential real estate, which is commercial or community real estate. So stay tuned. We'll have more episodes coming up shortly. Have a wonderful rest of your day.
Thanks, Brooke.
Thank you. And then you have to wait 2 seconds, because I always don't turn this down the right way. So everyone gets to watch me figure out how to do it.